Jeff Pierce taking a look at some of the retailers for us, Costco and Gap. Costco, let's start there, Jeff. I mean, pretty straightforward numbers per usual with this company. Maybe just a little profit taking.
Yeah, I think a little profit taking, high expectations. If we look at the report, earnings per share did beat 392 versus 360 expected. Revenue missed at 58.44 billion versus the 59.2 that was expected. Still up 5% year over year. Look down the line, same-store sales rose 5.6%. That was ahead of expectations. U.S. same-store sales also beat expectations of 4.8%. We saw Canada up 9% in same-store sales, well above what analysts were expecting. On the e-commerce side, that rose roughly around 18%, a little more than 18%, which we know is an area that Costco has been focusing on. They're trying to upgrade that e-commerce experience. Membership fees up at 1.1 billion. That's up from last year, also up from Q1. And they saw traffic increase to by 5.3% across the globe, 4.3% in the U.S. So the numbers are relatively good. We know the membership fees, is a question mark. People are wondering when and if those are going to be raised. Maybe there's a little reaction here that we haven't heard anything about that. But nonetheless, I think not a bad report. Probable that people are just taking some profits this morning.
All right. Yeah, I mean, it's been incredible how much Costco's run. That's another one, too, where, I wouldn't dare talk bad about Costco because it's just such a behemoth and, one of the most reliable consumer names out there. But it is, it's moved a lot here. I mean, what surprises, what aces up the sleeve? I mean, George is telling us they might hike membership prices, but otherwise, I mean, for, predictability of a company is good, but it doesn't necessarily justify huge runs to 50 trailing earnings. I mean, I don't know. I mean, it's pretty expensive stuff by Costco standards, back to where it was in 2021. So, okay, how about, the stock price is above its old high, and so is the valuation above where it was in COVID. So, all right, let's talk Gap. Jeff, the comeback story of brands from the 90s. That's the theme, or early 2000s. Abercrombie, American Eagle, Urban, Gap too, I guess?
Maybe. I mean, there is certainly a decent report today. They show that they are in transition, which the company has said almost all of their lines are transitioning right now. If we look at the numbers, earnings per share beat 49 cents versus the 20 expected. Revenue at 4.3 billion. Analysts were looking for about 4.2. That's up 1% year over year. Like a lot of retailers, they benefited from that 53rd week in 2023. But if we look at comp sales, those came in flat, above analyst expectations, which were down 1.1%. Old Navy revenue grew 6%. Comp sales for Old Navy were up 2%, beating expectations. Gap revenue was down 5% at 1.01 billion, but comp sales were actually up 4% year over year, beating analyst expectations of about 1.3%. Gap was also weighed down a little bit by selling that China business. Two lagging sides of the business here. Banana Republic, revenue down 2%, comp sales down 4%, still beating analyst expectations there. But Athleta, revenue down 4% at 419 million. Comp sales fell 10%. Big drag there. We know in-store sales were up 4%. Online sales were down about 2%. Gross margins came in better than expected at 38.9%. And inventories were down. I think this is kind of an interesting note here. Inventories fell by 16%. They say now that those are in line, they can kind of get away from some of the promotions and start selling at full price. On the outlook side, company is forecasting roughly flat revenue for Q1 as well as for the full year. Both of those numbers were really in line with expectations.
Okay. Yeah, I mean, it seems like a lot of this is Gap not being as bad as it was, just still plenty of soft comps. The only one positive, Old Navy, and it's only single digits, 2%. So I guess the bar still is really low here. I'm kind of surprised, given how good some of its peers are, how much better the numbers are in a lot of those companies, with positives and in some cases double digits for some of these more popular brands, that folks want to buy Gap, which has comps at 0, Old Navy the best at 2, and Athleta down 10. I mean, how is that not a jugular for this? I mean, isn't that was supposed to be their growth market, and they're just getting totally toasted by Lulu, Nike, Under Armour, two other ones that I can't pronounce that people wear, those athleisure brands. So it's terrible. Athleta down 10%. What is that?
Yeah, absolutely. I mean, listen, I think what investors are liking is they've seen them really focus on the cost saving side of the business. That has been good. As you pointed out, Gap is doing a little bit better. Their Old Navy brand doing a little bit better there. If you look at Banana Republic and you look at Athleta, you have to throw out that big question mark. Is there ever going to be a transition, a change to these brands, especially Banana Republic, that's going to bring it back to life? On the Athleta side, I 100% agree. I mean, I thought that would be a very competitive brand against a name like Lulu. One of the problems I think from the beginning is it's that, Athleta is very expensive. It's, really on par with Lululemon. So, kind of tough competition if you're going to come up to that price point and not try to undercut them.
True. Good point. All right. Market's okay with it, though. Gap up 5%. Alo, Vioro or something, another one. It's like, there's tons that they're not keeping up with, it seems like. Jeff, hey, last story after the State of the Union yesterday and some chatter about maybe a bipartisan TikTok ban. It seems like that's actually a real possibility. Social media stocks here have been loving it.
Yeah, absolutely, especially if you look at Snap. Big move from them on this news. Bill made its way through the House Energy and Commerce Committee yesterday. It could ban TikTok on all devices nationwide if they don't spin off from their parent company, ByteDance. Lawmakers say the goal is to prevent Chinese companies from collecting data on American users. ByteDance would have around 5 months or so, a little over 5 months to sell TikTok, or it would be illegal for app stores like Google and Apple to carry it. Now that it's cleared committee, we're going to see it go to the floor next week for a vote. President Biden is reportedly urging the bill's passage as well. If you look at TikTok, they repeatedly said they do not store U.S. data in China, and that these measures are really a freedom of speech issue as far as TikTok is concerned. So we'll see how this goes.
Got it. Okay. All right. Thanks, Jeff. Snap, really liking this. It'll take anything it can get. Folks are forced to use Snap again. Thanks, Jeff, for the look at some of the movers here this